Welcome to the Canadian Investors course. This is the overview. Terms of use and disclaimer. The content of all videos and articles produced by trusted wealth professionals in association with the FLLC are for educational purposes only. All ideas, opinions, and forecasts are for informational purposes only and should not be construed as a recommendation to invest, trade, or speculate in the markets. Any investments made in light of these ideas, opinions, and forecasts, expressed or herein implied, are committed at your own risk. The Trusted Wealth Professionals website and its publishers are not liable for any investment decisions made by its viewers or subscribers. Investing involves various levels of risk. Future results can be dramatically different from the opinions expressed herein. We strongly believe in the use of an investment professional before investing, as not all advisors are alike. We hope you view our sessions 8 and 9. They cover off the investment industry and the fees, so that you're fully aware of all the types of licensed investment professionals in Canada, again with their fees and their compensation, as well as the products and services they offer. This course was built to complement Canada's Task Force on Financial Literacy. It was launched in the mid-2009 timeframe and was sponsored by James Flaherty, Canada's Minister of Finance. Right now we're in the overview. This is the introduction, and I'll go through the next 17 sessions quickly. Session 1 is about income investing, short term, and it covers off GICs and the money market instruments. Session 2 is medium and long term of income investing and addresses preferred shares, the dividend tax credit, and how to profit in the bond market. Session 3 begins by introducing you to equities, covers off the capital markets, the stock markets, commodities, any REITs, and income units. Session 4 is finding stocks to buy or to sell. So a balance sheet analysis is presented, and your understanding of it is covered as well. Ratios from a fundamental standpoint are presented, as well as technical analysis. Session 5 addresses and covers the economic cycle, how that relates to stocks and bonds, real estate you're probably familiar with, and commodities. And then it introduces, if you're not familiar with this term, the yield curve, which is a valuable warning signal. Session 6 begins with a simple financial plan. This is your balance sheet. How much do you need? What is realistic? And your own nature in discovering that. We continue the financial planning in Session 7. Annuities, a variety of life insurance products are presented. Term life versus permanent life, which is universal and whole. Strategies to shelter money and strategies to address tax. Session 8 begins by presenting the investment industry. Who are the players? Who licenses them? And actually this is changing as we're speaking. And how do they get paid? That's probably got the greater changes as we record this in the beginning of 2017. Session 9 takes Session 8, the investment industry, and starts introducing fees, how they're compensated from an account standpoint or a product standpoint, and then a guideline is presented to help you choose what is the right fee structure for your investments. Session 10 begins by introducing the packaged investment products. And packages, there's a variety of individual products within one name or one product itself. So there's mutual funds, there's wrap accounts, there's exchange traded funds or ETFs. Session 11 continues the package product session from 10, and it gets into guaranteed income products, closed-end units, and even covers off structured notes. Session 12 talks about options, There's some conservative approaches. There's the ability also to generate income with options. Session 13 is how do I construct my portfolio? What does asset allocation mean to my portfolio? And how actually to customize it for myself, for my own risk tolerances. Session 14 talks about investment strategies. Should you be balanced? Should you be diversified? Should you be conservative? Should you buy and hold? Or what are some of the other investment styles that are available to you? Session 15 is one of my favorite sessions. Introduces rules-based investing. So it explains how to use fundamental analysis and then technical analysis to miss the most amount of the down in the markets as you can. Session 16 talks about the measurements that you see and hear in the marketplace. Some are from the Federal Reserve. There's a lot of actually long-term indicators that give you also a history of the previous years. Which ones are important to watch? Those will be presented in session 16. And session 17 is about yourself, human psychology, the investor psychology, and your relationship, your connection with your advisor or your planner. What is investing all about? Well, investing involves understanding risk. There's two types of investments, basically non-guaranteed and guaranteed. Non-guaranteed, you may have heard it termed or phrased by the investment industry as growth, but we all know that involves risk. So once again, keep in mind, there's two types of investing, non-guaranteed and guaranteed. But if you invest, it'll help you manage or deal with inflation. It will help you grow your money or your assets. But investing involves knowledge, patience, education, and discipline. So when you invest, what are your objectives? One is to, safety of your principal. Keep it. Are you going to lose any money? How much are you willing to lose? That's a big consideration. Do you need to invest for income? That's the second point. The third is growth. Do you actually need your capital or your assets to grow? And are they guaranteed or not? That's another concern. Liquidity, the ability to exit, where you can raise cash or switch between investments, but the ability to get in and the ability to get out when you're investing is termed as liquidity. Then, of course, there's knowledge. Do you actually know what you're doing? Got a lot of examples regarding this. But knowledgeable investing is key. And then, of course, access to product. If you could access 10 different products, that might be great. But if you're only accessing 2, you might be limited. And that's going to affect your investment objectives. So when you invest, keep in mind that there's liquidity risk, we mentioned on the previous chart. There's also interest rate risk. Everybody knows this from a house. Do you want to lock in? Do you want to take a variable rate? Are interest rates going to go up, going to go down? Are you going to take the 5-year term, the 6-month term? That's an example, a great example of interest rate risk. Inflation. What if inflation spikes to 3%, but your investments are only earning 2%? That's a risk. And of course, reinvestment. So if you're in a guaranteed product for 5 years, when you exit out of that, how are you going to reinvest if you need to? And then, of course, there's many examples, but bankruptcy, that's a big concern. Do you lose all your capital, or what percentage of your capital do you lose? So there's a risk range that relates to some of the products that are available. At the top, we've got futures and options. Those would be considered quite risky. And at the bottom, it's not GICs that are the safest, not government bonds, but the treasury bills that are in the money market. Those are actually the safest investments, and they're actually guaranteed as well. And then, of course, age factors in this. What is your risk tolerance? You've got the ability to recover should there be a down market, or if you're not practicing rules-based investing, do you participate fully in every bear cycle? But the younger you are, the greater the risk tolerance you have. And then obviously, if you're past 71, whether you're working or not, doesn't matter what your health is, but you may not be able to tolerate much risk. You might be looking for safer or guaranteed products.